This video is going to help all the viewers understand about this term called foreign portfolio investor. Foreign portfolio investor as a term is very prevalent these days, at least since the last 2 months that I've been observing, relating to stocks like Jubilant Foodworks, Axis Bank, Titan Industry, where these stocks are very volatile based on something to do with foreign portfolio investor. So I thought, why not throw some light on what's a foreign portfolio investor in India? Because as far as I understand currently, a lot of people viewing this video in terms of India are only relevant about two sources of foreign funds that come to India. One is called an FII and others called an FDI. So what's an FII? So we say an FII is nothing but an investor who's sitting in some foreign country. So an investor in some foreign country wants to invest in the Indian stock market. So let's say Nifty or Sensex, but he invests in the Indian stock market only with one view of making quick money with no time horizon as such, which means that he feels that a stock which is at 100 rupees is undervalued, he'll buy it at 100 rupees, and in 3 months hence, if the stock becomes 120, he'll sell it at 120, take the money and go away by making his profit. So who's an FII? An FII is nothing but an investor who's sitting in some foreign country and invests in India with an intention to make money and be a short-term or a long-term trader. Who's an FDI? An FDI is foreign direct investment. Now this guy does not trade in the Indian stock exchange like the FII does, but he invests money in a company and starts operating as a joint venture. Say for example ICICI Prudential. Now what is ICICI Prudential? ICICI is an Indian company. Prudential is a foreign investor, an FDI. So Prudential gave money to ICICI. ICICI gave some stocks to Prudential. Now Prudential and ICICI jointly operate business operations in India, and the intention of Prudential is not actually to make some quick money on the shares and move out, but to run an entire business in association with ICICI. So when FII is basically looking at making money quick, these guys are looking at building a brand over a period of time and cashing out at a very high valuation over a period of time, if at all they want to move out. FII money is called hot money in India, is because it comes in whenever they think they can make a lot of money and moves out very quickly when there is no money made in the market. But these guys, once invest in FDI, they kind of stick with the business operations for a long term, and their intention is capital appreciation and dividend through the business. Now, FII, FDI, very common term, but is it easy for you to become an FDI or an FII if you want to invest in India? Not so easy. So not everyone can become an FII, is because first you've got to go to SEBI, register with SEBI. Now SEBI is not going to give you registration so easily. So you have to show them a lot of things. First is you need to have minimum 1 year of operational background that you can show that you've been operating for a year and doing it well. There are a few net worth requirements that you have to take care of. After having satisfied this particular thing, there is a very stringent, strict KYC norm that you've got to go through. KYC is know your client, know your customer, where SEBI exactly wants to know where you're getting the money from and a lot of other things. They want to completely know you before they allow you to license. They allow you to kind of operate as an FII in India. After all this is done, you still every 3 years have to keep paying something called as assess fee to SEBI to operate as an FII in India. So basically not everyone is capable, or rather not everyone wants to operate as an FII in India. So what if you are a small retail investor in US? Now how will you invest in the Indian market? So what happens is, till date what used to happen is all these retail investors will go to FIIs and open something called as a sub account. Now what's a sub account? Sub account is is like your broking account that you open with the brokers. So you might want to trade the Indian stock market. So you approach Asit C. Mehta and open a broking account with Asit C. Mehta, which is a sub-broking account basically. Okay. So similarly, a retail investor opens a sub-broking account, or rather a sub-account with an FII. So the retail investor gives money to FII, and FII on behalf of the retail investor would invest in the Indian market. So say for example, as a sub account, you give 1 rupee to the FII. FII total has 10 rupees of investment. The FII will buy stocks in the Indian market worth 10 rupees. Once the stocks are bought by the FII worth 10 rupees, the FII will issue something called as P notes or promissory notes worth 1 rupee to the sub account holder, which is you, saying that I have on behalf of you bought stocks in the Indian market. Keep this P note or a promissory note guaranteeing that I have bought it on behalf of you. Okay. Similarly, even if I'm a big investor and I can take care of all the requirements that the SEBI has, I still don't want to become an FII because I don't want to go through the stringent KYC process and help SEBI understand where am I getting money from. So all those bigger accounts also start operating as a sub account of FIIs. Now, typically what happens is FIIs start investing money in the market, but can FIIs invest as much money as they want to invest in the Indian markets or in the stocks? Now what happens is, suppose let's talk about Axis Bank example. Okay. Now how much of Axis Bank can this FII buy? It's an example. Please do not go on the numbers. They may not be strictly correct, but this is just an example. So if an FII wants to buy shares in Axis Bank, how much can he buy? An individual FII, one FII in itself cannot buy more than 10% of the paid up capital of Axis Bank. Now this 10% figure is correct. Okay. All the FIIs put together cannot buy more than 24% of the paid up capital of the stock. Now this 24% is also correct. So this is how currently the FIIs have been investing and trading in the Indian market. But what happened in 2008 was, when India was going through crisis and we were desperately looking out for foreigners to invest in the country, SEBI thought of various methods by which they would kind of attract a lot of more foreigners to come and put money in the country, is where they introduced something new called as a qualified foreign investor. Now who's this qualified foreign investor? Qualified foreign investor is this sub account. All the big or small people who did not want to go through as an FII, those guys to encourage those guys to start investing in India, they introduced something new which is called as a qualified foreign investor. So who's a qualified foreign investor? A qualified foreign investor is someone who can directly invest in the Indian market and does not need to be registered as an FII. All that she needs is should fill up the KYC procedure and should have an Indian depository participant where all the shares that she is bought can be kept. If you take care of these two things, you can directly start investing in the Indian market. And these qualified foreign investors were given 5% more. To buy off all the stocks, in our example Axis Bank, over and above the 10% of the FII. So an individual FII can buy 10% and an individual qualified foreign investor can buy another 5% in the company. In total, all FIIs put together can buy 24% of the total paid up of the company. But these 24% for the FII plus 10% more was allocated to qualified foreign investors to buy. So how much can one individual buy in the company? 15% maximum. So 10% he can buy acting as an FII and 5% he can buy acting as a qualified foreign investor. And how much in total can all the foreigners put together buy? 24% as an FII and 10% as a qualified foreign investor cannot buy more than 34% of the company. So currently the FII limit in all the stocks is 24%, but in a PSU bank the FIIs cannot buy more than 10%. Sorry, cannot buy more than 20%. So now what started happening is FIIs went through stringent process. They had to pay SS fee, whereas the qualified foreign investors had to do nothing as such. So there was a dichotomy in the market that both are foreign investors investing in the market, but why are rules so different for them? Which is where SEBI introduced something called as a foreign portfolio investor. What exactly is a foreign portfolio investor? Foreign portfolio investor is nothing but all the FIIs and QFIs were put together under a new name called FPI. So now FIIs also are a part of FPI and QFIs are also part of FPI. So in FPI, you don't have to pay any SS fee to SEBI. All that you need to make sure of is you have a depository participant and your KYC is clear. You start acting as an FPI and don't pay any fees to SEBI. Okay. Now, what if in Axis Bank, the limit of 24% plus 10, 34% is taken care of and you want to invest more? So what do? Can foreigners not at all invest over 34%? Yes, they can. All that has to be done is the board at Axis Bank should send a request to SEBI and RBI, and once RBI approves, the limits are raised for more foreigners to invest in Axis Bank stock over and above the limits given. Now, how much can the limit go up? Limit can go up only up to the sectorial cap. So say for example, let's talk about Bharti Airtel. Now, Bharti Airtel currently might have a limit of 24% of foreigners buying stake into Bharti Airtel. But if Bharti Airtel sends a request to RBI and RBI approves, the next limit on Bharti Airtel stock will be 49% because telecom sector as a sector has a limit of 49% of investments by the foreigners. So this 24% can go as high as 49% if RBI approves the proposal for raising the funds, raising the cap. So what's a foreign portfolio investor? A foreign portfolio investor is nothing but a basket where all the FIIs and qualified foreign institutions investors were bought together to make things very simple, where everything else was removed except the KYC procedure, which was kept constant and was very strict, and they need to have a depository participant. Hope the concept is very clear, simple enough for you to understand. Do subscribe for our channel Ambition Learning Solution. There are a lot of such other videos that we've uploaded. Would love to hear your comments. Hit like if you actually liked it. Do share our video with your friends. Thank you so much.